Walmart beat, raised the year, and still had its worst day in 4 years. 9%, $80 billion gone, and it dragged the Dow down 704 points with it. Good morning. It's Friday, August 21st. I'm Nick Vertucci with Ashley Reyes and Marcus Brooks. Grab your coffee. Yesterday, we got a consumer print that sold like a miss, a Treasury bid that lasted one session, a 30-year that snapped most of Wednesday's gift back, and an off-price name after the bell that told a completely different household story. Flash PMIs at 9:45. BJ's Wholesale before the open. Monthly options expiration into the close.
Morning! I did not sleep, and I do not regret it, because that was the most honest tape we've had all month.
You say honest. I heard loud.
Loud is honest when $80 billion leaves the building before lunch.
Scoreboard first, and nobody's going to enjoy this one. Wednesday's levels graded last night. Ashley, you needed the 10-year back above 475 by the bell.
I remember the sentence. I also remember being on the right side of it at lunch.
Cash close was 4.69. CNBC had it as high as 470 during the day, not 475. That's a loss. 13 and 15. Streak of -3.
I'll take it. I got the direction, and I missed the level, which is the part you can score. The squeeze faded. I was greedy about how far it had to go in one session.
Marcus, 7,700 through the bell.
I can do the arithmetic.
7,641, down 67. That's a loss. Your 3-day streak is gone. 15 and 12, back to -1 until the extra.
Until the extra.
The extra. You asked for Walmart comps at 4% or a full year sales raise. Comps were 2.6. They did raise the year. Sales to 4 to 5% from 3.5 to 4.5. Letter of the call, that's a win. 16 and 12. Streak of +1. I'm giving you the point. I'm not giving you a parade.
I didn't ask for one.
Good, because the stock dropped 9% on that raise.
I called the print. I didn't call the multiple.
You also said if they cleared it, 7,700 holds through Friday. That half is still live into tonight, and you already lost it yesterday, so don't come in Monday pretending that was mixed.
Wouldn't.
Ashley, your extra still sits. Claims at 210 or under, 30-year closes, Friday above 525. Clinch printed 206,000. 30-year cash closed 5.24. You're a basis point away with one session left. I'm not scoring a Friday close at 6 in the morning.
I'll take the runway. I wanted the retrace. I almost have it on Thursday's tape already.
And the gold call from Sunday. Under 43.50 by Friday. Hawkish minutes. Gold closed near 4,580. That's $230 the wrong way. It grades at the bell, not at 6 a.m., but I would not start writing the victory speech.
There is no victory speech. There is a yellow medal that decided the minutes were a rounding error, and I noticed.
The market brought you another card. Still yellow.
I saw. The face is the same face.
On to the tape. Walmart. Give me the number that actually moved the stock, not the press release.
2.6. U.S. comps excluding fuel. Slowest in 6 years. Street wanted about 3.7. Ticket grew 1.1 against 3.1 a year earlier. That's not traffic. That's dollars per basket rolling over while gasoline sits in the mid-80s. Management used the word trade-offs. I cannot believe I get paid to watch the biggest retailer in America tell you the gas bill is eating the cart. It's terrible. It's also the cleanest real income print we've had all week.
Slow down. Revenue $187.9 billion. Adjusted EPS 81 cents against 74. They raised the year. Transactions still up 1.5. The box slowed. The network didn't.
See, that's where I disagree. You just skipped the ticket so you could...
I sat with the ticket. 1.1 is real. It is also not the whole firm. Advertising up 38, delivery up 40, membership up 17. That's the mix. I'm not skipping it.
Translate the refund, because that's the sentence everyone is going to skip. One plain sentence.
They booked about $2.9 billion of tariff refunds, that's 11,000 price rollbacks, and it juiced adjusted operating income growth by 750 basis points. Strip it, and the underlying is the top of the old 7 to 10 band, not a blowout. Then they told you they'll spend the rest of that cash on price in the third quarter, so the beat is this quarter, the giveaway is next quarter, and they asked you to average the two. The tape heard that as, don't pay a growth multiple for a one-time check.
Yahoo had the same read. Comps ex health and wellness were 3.4. Pharmacy regulation ate as much as 125 basis points. John David Rainey said the model looks more durable. Stock Story's point was the multiple, you don't miss comps. Guide third quarter EPS to 62 to 64 cents against 68th Street and keep the premium. Options priced a 5% weekly swing. Cash did 9.
Give me a level, not a vibe. Does 104 hold, or does this gap fill?
104 is the low until BJ's tells you otherwise. If this spills toward 110 today, Marcus gets the overreaction argument. If it sits here, the multiple just re-rated the consumer, and I think that's the more interesting version.
I'd fade the panic, not the print. Sam's Club comps were 4.4 on transactions up 7 and a ticket down 2.5. That's the warehouse customer walking in more often and spending less per trip. Same household, different door. International, up 7.9 constant currency. This is not a network stall. This is a gasoline line item.
What does a 1.1 ticket do to your November consumer call? Because Friday's retail sales miss is still sitting there. Target needed a refund to look historic, Lowe's DIY is under pressure, and now the biggest retailer in America just printed a 6-year low.
It makes me picky, not small. I wanted a third name. I got a raise and a 2.6 comp. That's not the all clear I described yesterday. It's also not Ashley's stretch shopper hiding at home. People walked into Sam's. They just bought less per cart.
Devil's advocate, Marcus, because I'm not letting you have the mix. Home Depot fell about 2.9, Costco about 2.5, Amazon about 2.2, Staples as a group down 1.4. That's not a Walmart-only air pocket. That's the goods economy, taking the same punch. If this is just the box, why did the neighbors sell with it?
Because Walmart is a Dow component and a large S&P weight, and a 9% gap is an index event. Neighbors gap on the headline. They don't all have a $2.9 billion refund they're promising to give back in price. I'll know more after BJ's. I'm not going to pretend Costco falling 2.5 on Walmart's morning is a third independent data point.
Or it's the same data point wearing a different logo.
Hold that duration next, because the other half of yesterday was the bond market taking back Wednesday, and I need a clean read before we turn this into a consumer-only show.
Please, I have been waiting.
Wednesday, Besant doubles the buybacks, 30-year cracks off 5.33, S&P snaps the slide at 7,078 on half volume. Thursday, Reuters had him on CNBC saying the buybacks could be more than $4 billion per issue. Yields lurched lower for a few minutes. Then they sold off anyway. Bloomberg had the 30-year up 7 basis points to 5.26. CNBC had the 10-year through 470 above the pre-announcement level. Cash close, 10-year 4.69, 30-year 5.24. Reuters this morning, so much for the Besant bid. That's the headline, not a paraphrase.
That's a one-day bandage ripped off in public. He told you the yields don't reflect the fundamentals. The tape voted that they do. Interest on the debt. This fiscal year is almost $1.2 trillion with 2 months left. Debt crossed $40 trillion, and his quote was, "There is nothing magic about the number. Nothing magic. $40 trillion. I love this market. I also cannot believe the answer to a 19-year high in the long bond is, we might buy even more in September. That's not a policy. That's a..."
Tell. I heard you. A one-session fade does not retire the failed high. 5.33 is still Tuesday's print. 5.24 is still 9 basis points below it. Bookvar was right. Wednesday, this is a maturity shuffle, not QE. It also is not zero. The equity unwind was Walmart. Don't dress a 9% Staples gap as a duration regime change.
The S&P lost 7,700 on the same day. The 10-year reclaimed 469.
Wanted. I know. That's a weight. Walmart was the heaviest name on the index. Strip it and you have a retailer re-rating and 4 basis points in the 10-year. Not a crash.
Ashley, Stillman his case. What's the version where yesterday was Walmart, not Besant?
Fine. The buyback still pulled the long end off a 19-year high. The 10-year never got through 475, which is my miss. And the index break is an $80 billion Staples gap, not a systematic duration dump. I don't buy it as the whole story. But that's the version.
I'll take the Steelman.
Don't get used to it. 2 days in a row is a habit.
What would actually change your mind? Print, not a vibe.
10-year closes above 475 today, with a 30-year through 525, and Walmart does not fill any of that gap. Then the bandage is dead and the consumer is the accelerant. If the 10-year sits in the mid-460s again because Besant talked more this morning, then Marcus gets the weekend and I get loud about a peg.
I'd flip it. If 7,640 holds and BJ's doesn't look like Walmart, Yesterday was an earnings air pocket on expiration eve. If we lose 7,600 and the 10-year is through 470 into the close, Ashley's collision is the regime, not the session.
We're not settling the bandage this morning. Here's yesterday's split, still open, and I'm adding a second one we're going to keep open on purpose. Split 1. Ashley thinks Besson's $4 billion is a political squeeze that already faded. Marcus thinks 5.33 was the selling climax, and Walmart did the index damage. Watch 475 and 7,640 into tonight. Split 2 is the consumer, and it is not the same argument. Don't mash them together.
Wouldn't.
They're related. They're not identical.
Data, because 830 actually showed up. Claims 206,000 versus about 210 to 11 on the street. Prior revised up to 212. 4-week average 204,000. Continuing claims a touch hot at 1.8 million. Labor is not breaking.
206 with a revision the other way is tight. That's the IF on my 30-year call, and it printed. Tight labor, oil in the mid-80s, minutes that said tightening is likely if inflation doesn't cool. Those three can share a room. A capped long end cannot. That's why 524 already came back.
Claims were a shrug with a minus sign. The one that wasn't a shrug was Philly.
47.4. Consensus was 25. Prior 41.4. Employment jumped to 27.9 from 10. 6-month outlook 73.6, highest in 43 years, per Connect Money. New orders and shipments cooled a little. Prices paid and received both eased. Leading economic index up 0.2, and the 6-month growth rate turned positive for the first time in more than 4 years.
47 against 25. That is not a step down. That just told Kevin Warsh his first Jackson Hole is not a cutting symposium. I asked for prices paid. I didn't get hot prices. I got hot activity and hot employment, which is the other way you keep a hawkish committee in the game. I love a number that loud.
You asked for prices paid. They eased. That's the line I said I'd respect. New orders cooled off a spike, closer to Goldilocks than to overheating, except the headline is ridiculous, and 25 was never the right consensus. The LEI turning positive is the one nobody will talk about, because Walmart ate the cameras. Conference board said most components were positive, except consumer expectations. That's this table, from a different building.
Consumer expectations were the drag. That's my shopper.
Or, it's a lagging mood number against the factory survey at 47. Mood can be ugly while activity is fine. We've run that tape before.
Give me the Philly line that changes your weekend. Ashley first.
If prices paid had spiked, I'd be pounding the table for a hike conversation at Jackson Hole. They eased, so I don't get that sentence. What I get is employment at 27.9 and an outlook at 73.6. That's not a slowing economy that needs duration relief. That's an economy that can absorb a 470 10-year. Maybe a 480. You're going to fade a 47 factory print because prices eased?
I'm going to wait for the PMI. If 945 rhymes with Philly, activity firm, prices contained. Warsh gets to be boring next Thursday, which is still my base. If the prices line reheats, your inflation paragraph in the minutes gets a live data point and I have to sit up.
Ross. Because the after hours tape just handed you a different customer than the one Walmart described, and I will not let this table run a single "the consumer" sentence for the rest of the hour.
10% comps.
10%. Sales up 13 to about 6.3 billion. EPS 266 against about 194. 60 cents of that is the same tariff refund. Strip it, margin still expanded 205 basis points against a plan of 130 to 150. They raised the year. Stock closed down 2.4 with Walmart, then jumped about 8 after hours toward 247. Jim Conroy said new customers and more engagement from existing ones. Traffic, not ticket.
That's the tell I wanted when TJX got punished 4% on a 4% comp. Off-price traffic is absorbing the trade down. Same gasoline bill, different aisle. I don't read 10% traffic as a consumer cracking. I read it as a consumer substituting, which is the sentence I used on Home Depot, and I'm going to keep using it until the warehouse names actually.
Break. Wait, back up. TJX sold off on a beat 2 days ago, and now Ross is the all clear?
TJX was a guide on the next quarter story in a market that has been selling adjectives. Ross printed 10 on traffic and raised the back half. Those are not the same tape.
Or they're the same shopper leaving the mass box. 2.6 at Walmart, 10 at Ross, Sam's transactions up 7 with a ticket down, 2.5. That is not. The consumer is fine. That is the consumer hunting. Hunting is what you do when the gas bill is first on the list. I am so here for this split. I also think you're about to call a format win a macro win, and those are not the same thing.
Format is information. Macro is the LEI turning positive and claims at 206. You want one narrative, the tape is running two.
So here's the consumer split, and it stays unresolved. Ashley thinks 2.6 comps and a 1.1 ticket at Walmart with oil in the mid-80s is a real income crack that takes the multiple lower into Jackson Hole. Marcus thinks Ross is 10, Sam 7% transactions, and the digital mix inside Walmart mean the household is substituting, not breaking. Tie break is this morning. If BJ's ticket looks like Sam's, down, with traffic up. Marcus has the better read. If BJ's comps look like Walmart's box, or they talk about trade-offs in the first 5 minutes, Ashley does. I don't want it's mixed at 6 a.m. Saturday.
You won't get it.
Mixed is still a cop-out.
Oil, because it sat under every one of those sentences, and then Trump named the week. CNBC, economic warfare, isolation on an unprecedented scale, phrase of the night was economic D-Day. CNN had tremendous consequences for any country that gives Iran a lifeline. Axios still had the U.S. escorting 15 to 20 tankers a night through a southern Hormuz corridor, about 10 million barrels a day, half the old volume. Brent finished above 93. WT, I near 86. Overnight, Benzinga had Brent easing to 93.24, WTI to 86.18. The barrel didn't explode, it also didn't leave.
Filed. Still loud. A 6-year low Walmart ticket with gasoline is the named culprit, and the president announcing economic D-Day on the country that sits on the strait. Those two things share a week. If isolation actually tightens seaborne crude, 93 is not the high. If it's a press release with a corridor that already moves 10 million barrels, oil is the accelerant, not the spark. I'm not dropping it just because Walmart had a bigger microphone.
File it. Rank it. Yesterday was Walmart, then duration, then oil. That's still the ranking until Brent pushes through 94 with volume. Overnight pullback to 93.24 is the corridor, not the capital letters in the
Post. Capital letters move prices when the SPR is still at a Reagan-era low.
They moved them 2% yesterday. They did not gap WTI to 90.
Gold and Bitcoin, 30 seconds, because they did the funniest thing they could to a down day in stocks. Gold firm near 4 to 580. Bitcoin through 70,000 for the first time since June, near 72,700 into the close. Overnight, Benzinga had it still ripping, north of 75,000. The S&P lost 7,700. The assets that are supposed to care about the dollar and the debt did the opposite of the index.
That's the 40 trillion card. Debt crossed the round number. Besson said it isn't magic. The dollar sat near 98.9, and gold and Bitcoin hurt fiscal, not Walmart. My gold call is in genuine trouble. I'm not going to sit here and pretend 4,580 is a way station to 4350. It isn't. If I get bailed out by a Friday dump, it'll be luck, not the thesis.
I'll give you that sentence. I won't give you Bitcoin at 75 as a crash warning. Weaker dollar, a White House crypto meeting, strategy up about 8, Coinbase about 7. That's a bid. It can be a bid and the S&P can still be heavy. Those have not been the same trade for 2 weeks. What does 4,580 gold do to your Sunday call if it doesn't dump today?
It kills it. I already said that. What does 75,000 Bitcoin do to your November call if the S&P is sitting on 7,640?
It makes me less interested in using the index as a mood ring. I'd rather own the thing that's discounting the debt and the dollar than the thing that's discounting Walmart's ticket. Different patience.
Human beat because I need one, and it's this. We are 3 people who spent Wednesday treating a Treasury buyback like it was the only story in America, and then a grocery store in Bentonville did more damage in 2 hours than Scott Besson did in 2 days. I'm going to think about that every time I walk past a gas pump this weekend.
I already am. The pump is the show.
The pump is a line item. The show is still the multiple.
You're exhausting.
It's a gift.
Coffee is still a legitimate strategy. Back to it. Leftovers, fast. Moderna gave back 23.5% to 133. That's a slice of Wednesday's double. Gone. Deere went the other way. Up about 7. Construction and forestry up 18 on infrastructure and data centers. Marvel up about 5.9. Micron about 4. Reuters, citing Bloomberg, Broadcom seeking more than $60 billion in a new AI debt deal. That's the issuance pile. 4 billion of buybacks does not touch.
60 billion against Besant's 4. A chip company is going to the window for 15 times the operation that was supposed to cap the long end. I love the size of it. I also think it's why the 30-year doesn't care what he said on television.
Or it's why I'd still rather own the equipment that's booking. Deere just told you construction is running on data centers. Marvel bounced. The crowded names can still be positioning. That diagnosis didn't die because Walmart had a 9% day.
It also didn't get a confirmation.
Didn't get a burial either.
This morning, Benzinga around 2 a.m., S&P futures up about 0.08, NASDAQ 100 up 0.2, Dow basically flat, Russell up a third. Slightly green, not a revenge open, not a continuation dump, oil a touch softer, Bitcoin still bid. Besant overnight warning, the toughest sanctions in history on Iran. That's the D-Day follow-through, and the barrel still faded a little. Monthly options, expiration this afternoon. VIX closed 1596, up 7%. NASDAQ volume, a light 6.4 billion against a 9.5 billion average. August is still August.
A quiet open after a 9% staples crash is the part that makes me nervous. That's not digestion. That's the market waiting on BJs and a PM. So it knows which story to run into the weekend. If the PM. Our prices line is sticky. The 10-year has a reason to finish the job I started yesterday. If it's contained, Marcus gets his boring wash for another 5 days.
BJ's is the one that actually sizes the leftover consumer argument. Streets around $1, $16, $17, revenue near $6 billion. This is the club channel after Sam's went plus 4.4 on transactions and minus 2.5 on ticket. I need to see whether that warehouse customer is still walking in. Buckle reports too, which is a mall and teen read I would not overweight, and KE Holdings, which is China Housing, which is not this table's fight today.
Give me the number you're each actually watching on BJ's.
Ticket, and whether they say trade-offs. If comps come in under 3, or ticket is negative and they blame gasoline, I think the off-price bid in Ross gets treated as a one-name treasure hunt and the mass and club tape stays heavy. That's the honest consumer, not the firework.
I'll take comps at or above 4, or a ticket that isn't worse than Sam's, minus 2.5. They don't need to be heroic, they need to not be Walmart's box. A BJ's that looks like Sam's is the substitution case. A BJ's that looks like Bentonville is the third name I said I wanted, and it would be the one that goes the other way.
PMIs, quickly. 945, S&P Global Flash. July manufacturing sat near 53.9. Street for the Flash is around 54. Services in the same neighborhood. The surprise lives in prices and employment, same as Philly. Hot prices with soft orders is Ashley's minutes coming alive. Firm activity with cooler prices is Marcus's Goldilocks into Jackson Hole. We watched the U.S. print. That's the one that hits the 10-year.
And Jackson Hole is still 6 days away. Warsh's first symposium as chair. Next, FOMC is September 15th and 16th. This weekend is the last clean one before the tape starts trading the speech. I want the 10-year to do its work before he gets to the podium, because if Besant is still talking the long end down while Philly is at 47, that collision gets televised.
He'd rather be boring. I would too. A PM, that doesn't reheat prices gives him permission.
Next week, because Friday is also a handoff. Light earnings until Tuesday. Intuit, Zoom, then NVIDIA and Salesforce on Wednesday. That's the AI calendar sitting on top of a Jackson Hole Thursday. We are not previewing NVIDIA at 6 a.m. on a Walmart morning. We are naming the stack so nobody's surprised when the tape changes subjects.
Noted. I will try to wait until Monday.
You won't. You won't.
I might.
Calls. These are tonight's board. Ashley, your 30-year 525 is still live. Claims already printed in your favor. I need one more that isn't just a long bond again.
10-year closes above 475. That's the level I missed yesterday, and I'm not moving it. If Walmart, BJ's, and a PM, I can't get the benchmark through the number Besant spent 2 days defending, then the squeeze still has a pulse, and Marcus gets the weekend on duration. If it closes through 475, the bandage is done.
Marcus.
BJ's. Comps excluding fuel at or above 4%, or a ticket no worse than minus 2.5. That's the warehouse red. If they clear it, I think 7,640 holds through the close, expiration and all. A club beat does more to the multiple today than another sentence from the Treasury Secretary.
You're ranking BJ's over the long end again?
I'm ranking cash over a press release. Same ranking as Wednesday. It worked until it didn't. I'm running it once more.
It didn't. 7,700 is gone.
7,640 is not gone. That's the number I just gave you.
So we've got Ashley on 475 in the 10-year, her 525 in the 30-year still sitting, Marcus on BJ's 4s or ticket, and 7,640 as the index marker. Gold under 43.50 still grades at the bell, and I would not bet the rent on it. That's a lot of Friday doing the week's work, which has been the pattern since the record.
Most Fridays lately.
Most days lately.
Here's today in one breath. Walmart beat, raised, and dropped 9%, 2.6 comps, 1.1 ticket, 2.9 billion in tariff refunds. They're going to spend on price, 80 billion of market value gone, worst session in 4 years. The Dow lost 704. The S&P closed 7,641 and took 7,700 out. Besson said the buybacks could be bigger than 4 billion. The 10-year still finished 4.69 and the 30-year 5.24. Claims 206, Philly 47.4, prices paid eased, LEI 6-month rate positive for the first time in 4 years. Ross printed 10% comps on traffic and jumped 8 after hours. Gold 4,580, Bitcoin through 72,000 and still bid overnight, debt over 40 trillion. The split on this table is crack versus substitution on the consumer, bandage versus climax on the long end. Watch BJ's ticket. Watch the flash PM. I price his line at 945. Watch 475 and 7,640 into expiration. And watch whether Walmart does any filling or 104 is the new shelf. If the show helps, follow Nova Ventures Daily wherever you get your podcasts and catch our live takes all day at Nova Ventures CEO on X. That's your Friday morning brief. Have a great day, and we'll see you tomorrow.